From Kansas State University, this is Agriculture Today. Eric Atkinson with you. Ahead today from the Livestock Marketing Information Center, Katelyn McCullock will offer her current analysis of the cattle markets. She'll talk about the jump in fed cattle prices last week, whether that was the start of an extended rally in that market, and she'll also break down the USDA's cattle inventory report, leading to the LMIC's updated fed and feeder cattle price forecasts for 2022. Then K-State's Jenny Ifft will launch a multi-part series on price risk management in cow-calf production and the assorted tools available to you producers there. And following up, K-State's Robin Reid with the details on a special workshop on this topic that will be held at 29 locations around Kansas later this month. All that here on Agriculture Today. You're tuned in to Agriculture Today, our Monday edition. Thanks for being along with us once again. Well, it's a pleasure to talk about the positive developments in the cattle market this past week, and we'll get into the specifics there and more as we're visiting now with Katelyn McCullock, the director of the Livestock Marketing Information Center out in Denver. A project sponsored again by K-State and other land-grant universities. Katelyn, $3 to $4 better in the cash-fed cattle market this past week, in the central and southern plains anyway. One might look at that and think that that's, at long last, this breakthrough week in the market that so many have been hoping for.
Now, it is that time of year where we would start to see probably some appreciation in the fed cattle market. Friday closed in the 5 area about $139.70. I think that's a fairly strong price considering the weather disruptions we had earlier in that week and possibly a little bit lighter or trucking issues. I mean, the kill levels on a national basis, at least for federally inspected, didn't seem to really take a hit, but there was this notion that we might see some problems associated with that. And so I would take that price as a good sign that we didn't necessarily see some of those problems that we might have anticipated. But yeah, this cash market is really strong. The box beef number has started to come down a little bit, and so we might see a little bit of shrinking in those packer margins. Still very strong packer margins, though. Plenty of room there to continue to pay high fed cattle prices in the first and second quarter. But yeah, overall, we're looking at still a very strong cash market.
While we're on the cash trades, want to slip in a word about the feeder market as well and the numbers that you have gathered from the auctions and otherwise. Are we likewise seeing a friendly tone there?
So the feeder cattle market has been maybe a little more interesting. We've seen a little bit of break between heavier weights and lighter weights, especially in the southern plains. So over the last couple of weeks, Southern Plains steers have 500 to 600 pounds, have kind of hovered just under that 190 level, but showed strong gains basically since the fourth quarter of this year. Now, if you look at 7 to 8, those haven't really gained ground. They've relatively held rather steady under 160, maybe even a little bit lower than what we saw in December. Last week, when we saw pretty strong gains in both the live cattle market and some days in the feeder cattle market. Corn and soybeans, I think, are playing a more significant role right now in those feeder cattle prices. Corn still in December looking at above $6, so not inexpensive by any means. And so I think that's really going to temper this feeder cattle market moving forward. These things don't usually at least operate for very long in silos. They all need to be connected. Those younger calves need to grow up, get fed, and then eventually be processed. And so you don't see these markets out of whack from each other for too long usually. And so I think that needs to be part of in all of our minds as we're thinking about implications from the cattle inventory report. What are feed costs going to do this year? Now, the corn and soybean market are playing off of South America right now quite a bit, but pretty soon we're going to turn our attention to the U.S. crop and what that looks like in aspects of planting intentions and then how the growing season is. But from our perspective, it doesn't appear that there's much that's going to change the current corn price, at least from now to the U.S. harvest. It does look like South America is being heavily influenced still by that La Nina pattern, which generally is a little bit weaker crop production scenario. And so when I look at that feeder cattle market, I'm not sure there's a whole lot of upside for those 7 to 8s. We have actually a relatively flat but higher than last year price outlook with a little bit better prices maybe on those calves from a year-over-year perspective.
And that segues nicely into that USDA cattle inventory report posted a week ago, this past Monday. It was declared, that report, generally bullish because the numbers were lower, as all anticipated, and on the lower range of many forecasts. How did you see the numbers, and what are they saying for 2022 then, Katelyn?
The beef cow herd did decline pretty significantly. I think it was just over 2% and about a 719,000 head decline. Now that's the net decline. There were some revisions to the reports, as there typically are. NASS goes back and revises last year and then the July numbers as well. So keep that in mind. But I guess what I focused on were where those large declines were and maybe what surprises we saw out of the report. So the substantial changes we saw in key states, with the largest declines in South Dakota, Texas, Missouri, and Montana. Now, the Northern Plains did see quite a bit of drought last year. That wasn't all that surprising. Probably Missouri was one of the more surprising numbers for it to see that large of a decline. And then some interesting increases. Idaho, Washington, California, all up, which had a lot of drought last year too. And also, by all accounts, seem to be shipping a lot of cows out of those regions. So a little interesting tidbits there. Now, the states that declined a lot more than those states that increased. So we're looking at Missouri and Montana declined about 90 to 95,000 head, whereas South Dakota declined 189,000 head from a year ago, Texas down 160. And then all those states that I listed that increased, those are up less than 35,000 head. So not large changes on that side of things. The calf crop, another number we focus on a lot, was down 1.2% and saw significant declines in Montana, California, and Florida. The under 500 pound category decreased 2.6%. So sometimes those numbers, the calf crop and that under 500 pound number, are a little bit closer together in terms of a percentage wise. But we did have those big storms last year that impacted right during calving season. So we might have lost a few calves there. We also are continuing to wean at heavier rates. So weaning cows at heavier rates can push that number, those cattle, into higher categories than what we would have seen 10 years ago, et cetera.
In general, when you listen to the commentary and look at the numbers, they do seem to fortify, Katelyn, the idea of a stronger market for the balance of the year and for quite a while. Is that a fair assessment of where we may be going?
I would have characterized it as maybe only slightly stronger. I mean, we expected beef cow inventory to be down about 2%. I think the calf crop is maybe the one where that gives me pause to not fully agree with you, maybe, is that the calf crop was down only 1.2%. And so, you're not looking at a 2%, 3% decline in that calf crop. And so that's something important to keep in mind. But we do have less cattle outside of feedlots. We do have less cattle in general through the revision process, and then what the numbers said this year as well on January 1. So all of that does point to tighter supplies moving forward. And I think that was largely the consensus heading into this report. And maybe it was a little bit tighter than maybe that average expectation. But I wouldn't say, we're expecting wildly different things than we did before this report. Right. LMIC did increase our forecast based on this report. Not significantly, about 0.5% on the cattle slaughter side and, maybe a little bit smaller on the production side. So we did decrease slaughter about 0.5% in 2022 and 2023 based on what that inventory said. And then we did raise prices to reflect those tighter supplies. But in truth, right, this market has been a lot stronger than we anticipated, particularly on the calf side early this year. And so some of that's reflecting maybe some of those changes we weren't anticipating that maybe aren't necessarily directly report related as well. So from an annual basis, we've increased our annual fed cattle prices in 2022 to 135 to 137. So some of you might feel like that's still a little low based on where the futures market is, but essentially we're looking at some of these economic indicators for the second half of 2022 and not feeling as confident maybe in beef demand as some other analysts are. I think that consumer pressure from a financial perspective is going to matter. We have consumer sentiment now below 70. And so this is one of the lowest numbers since about 2011. So lower than any of the 2020 numbers. And so all of those things are factoring into our decision. Now, because I kind of have that smaller top end range on my fed cattle market, and we've already talked about corn today, that kind of limits what I have feeder cattle prices doing over the next 2 years. Not that they're not going to increase. So keep in mind, my fed cattle price is still an 11% increase from 2021. Still a strong gain, but still under that 140 level that I think most people are looking at this point. I do have us hitting 140 feds in 2023. So it remains to be seen kind of how that market develops or how quickly it develops. We might see those prices a little bit earlier, but I don't have an annual average being that high quite yet. On the 700 to 800 pound feeders in the Southern Plains, I've kept them, in the mid 160s for 2022. And again, I'm going to be watching that feed market pretty closely over the next year to see how that develops. And then calf prices we raised to 189 to 193 per hundredweight. So another big increase there, but I've been a little surprised at how strong it has been this spring, or this winter, I should say, and we'll continue to watch that develop as well.
Well, it may be too strong to call it a boom time, but this is pretty firm footing for the markets. That's an encouraging thing. And we would point folks to your website, lmic.info, that has all of this information handy for producers to review, lmic.info. Katelyn, thank you as always. We appreciate your time and your input.
Thank you.
She's the director of the Livestock Marketing Information Center. Katelyn McCullock with us on the cattle markets. We'll be back on Agriculture Today. We're back now on this Agriculture Today, and today we're launching what will be a multi-week series about price risk management in cow-calf operations and opportunities to mitigate that risk for the benefit of you producers out there. This is an express interest of our guest now from the Agricultural Economics Department at K-State. Jenny Ifft has joined us, and she's been doing extensive work in the area of risk management in all phases of agriculture, but particularly cow-calf production. And Jenny, as we set this up, you're thinking that there's an opportunity for producers to take on different approaches here.
Right. How I got into this as an agricultural policy specialist was livestock risk protection. This is an insurance product that's been around for about 2 decades. In the past couple of years, it's become more affordable, so a lot of producers are revisiting it. And I want to make sure that people know what it does do, what it doesn't do, what the advantages and disadvantages might be.
And over these next several weeks, each Monday, we'll be looking at another angle on that livestock risk protection and how it compares to other price risk management tactics here. But you want to distinguish right out between what we talk about as price risk and the uncertainty accompanying cow-calf production in this instance. Explain, if you would.
Right. Well, a lot of times we talk about risk versus uncertainty, and I like to think about this perhaps like a cow-calf producer would. So around breeding time, you might not be selling anything for 1.5 years. And so I would call that a situation with uncertainty. I certainly would never want to guess what the markets are going to be like in 1.5 years, and I don't know many people who would. You can't buy a futures contract 1.5 years out for feeder cattle. So that's a situation with a lot of uncertainty. When you think about risk, a more technical definition would be that you know the potential outcomes, but you don't know what you're going to get. So if you think about right now that I can go online and I can get the futures price for feeder cattle in October. So I know right now what the markets are saying with the best information we have, what feeder cattle prices are going to be in October. Now they could go down from that, and that's a form of risk, and that's something that I could try to manage. But that's the focus here. Sure. It's more about changes in prices than absolute price levels.
Part of what we're doing today in setting this series up is inviting producers to invest more time, more thought, more strategy into risk management here, price risk management.
Right. It's not necessarily has to do with whether prices are low or high. It has to do with changes in prices. So right now, feeder cattle futures for October are around $180 per hundredweight. So I've talked to a number of producers who that's a good price. They can make money at that. The question is, what if it goes down $10 per hundredweight, $20 per hundredweight or more? Will those profits go away? And probably the most drastic example of this in the past 2 decades was 2015. So let's travel back to April of 2015. Feeder cattle futures were around $214 per hundredweight. Now, come October, the price had dropped to $183 per hundredweight. So it was a huge drop.
Sharp fall.
In expected prices. $180 might have been enough for some producers, but it was a lot less than what markets were saying 6 months earlier.
Point being that navigating those sharp swings, like the one you just mentioned a moment ago, that's where a producer might be able to soften the blow through good strategy and using the tools available to them. And that's what we'll be talking about in this series.
Yes.
So really we're just providing this teaser, if you will, Jenny, for folks to be with us every Monday for the next few weeks, and you will get into the more precise means of managing that price risk through the tools that you brought up.
Right. So next week I'd like to talk about different strategies to manage that type of risk.
We'll have you mic side then to do that very thing. Until then, many thanks to you.
You're welcome.
She's developing a blueprint for you cow-calf producers to consider in managing your operations price risk, and we'll be talking about that at length here in the weeks to come. Jenny Ifft from the Agricultural Economics Department here at Kansas State University. And following up on what Jenny shared in regard to risk management for the cow-calf operation, K-State Research and Extension will soon be providing a special session that gets into all of the ins and outs of that risk management. K-State agricultural economist Robin Reid is here to share more on this. This is another installment, Robin, of a series on risk management that you and others at K-State have been hosting for the last several weeks, correct?
Right. So Lavelle Windsor, one of our farm analysts, and I have actually been covering all these different topics in separate weeks for farming operations. So we looked at doing enterprise budgets for cost of production, looking at crop insurance options. Our third session was on grain marketing. And then we have a program coming up on the ARC and PLC government programs for crop operations. So really, what we wanted to do is come back and revisit those same risk management topics, but focusing on cow-calf production. And really, risk management techniques and marketing are different when you're looking at livestock versus our corn and soybean and wheat enterprises. So we're dedicating a special night to cover these risk management topics.
That night is on Wednesday, February the 23rd, and it'll take place at multiple sites around Kansas. Same program, right?
Right. So we are actually going to be in 29 places across Kansas at the same time, and how we go about doing that is we broadcast here at campus, but instead of it being just a webinar, attendees go to an in-person location across the state. And the difference and the advantage of that is, for one, networking with other people in your area that are facing the same challenges and things that you do, and just being able to talk about these issues in a group setting. And then the other thing that we do every night that we've been hosting this program is a hands-on activity. And basically what that does, and this one will be on enterprise budgeting or cost of production, what that does is help participants to learn the concepts we're talking about, or, understand them and then apply them. So you work with a case farm, you go through, do the activity with the small group at your site, and then you go home with a tool that you can take and apply to your own operation. So that has really been also the advantage of having those in-person sites. We also start with a meal each night. So it is an intense 3-hour program, but all of our participants have been really happy that is an in-person and not just a webinar-type program.
And the program will explore all the potentials as far as risk management approaches here. Hedging would be likely one of those. The special insurance product that Jenny talked about would be another.
Absolutely. So as I talked about, we're going to focus on enterprise budgeting and cost of production analysis in the beginning and do the activity on that. And that really sets the stage for making marketing decisions, covering risk with insurance products. So we're going to cover both those topics in the same night too. As you said, Jenny will be coming online to talk about the livestock risk protection and other tools that can be used on a cow-calf operation for risk management. And Lavelle Windsor will be talking about cattle marketing.
And anyone that's involved in a cow-calf operation can be part of this, to stress.
Absolutely. So the first 4 sessions of our series where you kind of had to sign up for all of them because all those topics fit together. But we've called this the optional 5th session just because we know there's some producers that don't have corn and soybeans and wheat and, just want to learn about the cow-calf risk management aspects. So this 5th session is open to anyone, not just participants that have been with us for the entire series. And also to that point, when you go to register, you will see this is a Women in Ag program, but we are really promoting it for all participants. If you're a gentleman attending one of our sites, I doubt you will be the only one. So we really want to make sure everybody that wants to learn about risk management, especially as we have higher prices, that actually sets the stage for things to be more risky and that our expectations for those prices maybe won't be what we think they could be next fall. So risk management is very important in high price times, probably more so than low price times.
Again, these sessions will be held at central locations in each community that's taking part, and you can touch base with your local extension office to find out which of the 29 sites is nearest you. There is a registration fee, and that needs to be taken care of before participating.
Yeah, so the fee is just $15, and that basically covers your meal cost at the site. We do have a grant through Extension Risk Management Education to be putting on this event, as well as some statewide sponsorship from Ag Risk Solutions and Farm Credit Associations of Kansas. So really, to see the 29 sites, the easiest way is to go on our website at agmanager.info under the Events tab. And this program, again, is called Risk Management Skills for Kansas Women in Agriculture. But again, this is open to all participants. So go on the website. You'll see the list of 29 locations. You can register right at that time. And then you pay your registration fee when you get to the local site that night.
Take a look at this special program. Well worth your time, cow-calf producers, on risk management. The evening of Wednesday, February the 23rd, agmanager.info can direct you to the registration procedure and all the particulars on the program, including the location nearest you, the specific building in which it will be held. So the best of luck with this, Robin. Thank you.
Thank you, Eric.
That from K-State Research and Extension agricultural economist Robin Reid. This is Agriculture Today. Now for you on Agriculture Today, the weekly rundown on K-State agricultural events coming up in the days ahead around the state. For you crop producers in northwest and north central Kansas, that K-State Crop Talk webinar series continues this week. The next installment is Noon Today, and it'll be presented by K-State Environmental Quality Agronomist Peter Tomlinson on livestock waste as part of your soil fertility program. Ought to be a good one, and you're encouraged to register right away for it at northwest.k-state.edu/events. That's northwest.k-state.edu/events. This series continues each Monday over the next several weeks. And you wheat producers, remember that the Wheat RX seminars are set for this week, specifically tomorrow the 8th in Wichita at the Doubletree by Hilton near the airport, and on Wednesday the 9th in Hays at the Memorial Union Ballroom at Fort Hays State University. Kansas Wheat and K-State Research and Extension teaming up to share with you growers the latest research recommendations for high-yielding and high-quality wheat. That program is loaded with good information, and you can still take part, but the clock is ticking. Go right away to kswheat.com, and you'll find the Wheat RX registration page, kswheat.com, to attend either of these seminars, again tomorrow at Wichita and Wednesday in Hayes. Also, K-State's series of soybean schools comes to a close this week, tomorrow to be exact, at 2 locations in the state. These are in western and central Kansas, respectively. A soybean school in the morning tomorrow, starting at 8 o'clock in Oakley at the Buffalo Bill Cultural Center there. And the last of the schools is set for tomorrow afternoon, starting at 3 o'clock at Great Bend, the Knights of Columbus Hall there. Soybean crop production practices, weed, insect, and disease control, nutrient management and soil fertility, a big item, of course, risk management, and more. Touch base right away with the extension offices in the host locations, Oakley and Great Bend, to save your spot at the K-State soybean schools coming up tomorrow. Also, tomorrow morning into the afternoon, there's a Kansas Soil Health Conference in southeast Kansas at the Community Center in McCune. That's from 8:30 in the morning until 3 in the afternoon. Folks from K-State Research and Extension, the NRCS, and several producers will be on board to talk about building soil health for profit. Contact K-State's James Coover at the Wildcat Extension District right away to reserve your spot at this conference. Again, taking place tomorrow in McCune. And the final 2 of those Winning the Game corn marketing workshops are set for this week likewise. Wednesday the 9th at the Community Building in Richmond, East Central Kansas, and the final session Friday, February the 11th in Holton at the Northeast Kansas Heritage Complex there. K-State's Dan O'Brien and the Kansas Farm Bureau's Mark Nelson covering the expected corn market trends for 2022 and what makes up an effective corn marketing plan. Again, those workshops in Richmond and Holton, Wednesday and Friday, respectively. Contact any of the Frontier Extension District offices about the Richmond event and the Meadowlark Extension District offices for more on the workshop in Holton. And cattle producers, just get this one on your calendar. We'll be talking it up more as we get closer to the date, but the 2022 K-State Cattlemen's Day is set for Friday, March the 4th. They've strung together another fine program for Cattlemen's Day. Among the highlights, a professor out of the University of Oklahoma School of Meteorology, Jeff Becerra, on what's up with the weather. That's of interest to all of us, of course. And the full updates on K-State's beef research portfolio, as well as the beef industry economic outlook from K-State's Glenn Tonzer. Have it on your radar, cattle producers, for Friday, March the 4th, the 2022 K-State Cattlemen's Day. And our time is away. Thanks for tuning in. Eric Atkinson for Agriculture Today. This is the K-State Radio Network.